Elaine Kub is our corn and soybean market analyst this week. U.S. farmers this spring planted nearly 91 million acres of corn and 89.5 million acres of soybeans. Those numbers were released Friday in two key USDA reports and may have helped prices for the commodities shoot higher. In 3 sessions, July corn added 22 cents and July soybeans increased 60 cents. But spring wheat has been the real star. In just 2 weeks, the July Minneapolis wheat contract jumped $1.62. That's largely attributed to drought conditions in North Dakota and in South Dakota, where Elaine joined us from Wednesday afternoon. We started our conversation by asking about current conditions in her north-central area of the state.
They are pretty grim. It is depressing going around here. I'm standing in a spring wheat field that has been zeroed out for insurance and just baled up. That's pretty widespread. So there will be some spring wheat fields that do get harvested, you know, on the fringes where this drought isn't so bad, this pocket of drought. But by and large, we're talking not only a loss of planted acreage, you know, we saw that in the acreage report last week, that overall spring wheat was down 6% year over year. We're talking losses of total fields that get zeroed out like this one. And then we're talking really grim yield prospects for anything that does get harvested.
Well, is there a substantial threat to that corn and soybean crop as well then?
Absolutely. So this is a very widespread drought. You look, 99.9% of North Dakota is in some kind of a drought. So all of that corn, all of that soybeans, all of the pulses that are grown in North Dakota, the canola, the flaxseed that is pretty much primarily grown in North Dakota, all of that is going to be looking at major yield drawdowns. Now, for the corn and soybean markets, how much that plays into the overall U.S. production, it's not as significant as the specialty crops or the spring wheat that are primarily grown in this region.
Let's talk about this crazy ride we've been on here for the past about 3 sessions. How much of it is due to what we're seeing in spring wheat or the overall weather conditions, the weather forecast in USDA's report on Friday?
I would say almost 0% to spring wheat, because we're really not in a scenario where even the Kansas wheat, that is a low protein this year, so it can't really even come into that high protein milling wheat market. So almost none of that is carrying over into the other markets. The acreage reports, I think, has largely been ignored, or at least if it had bearish implications, it didn't really play into the prices. So I think almost all of the rally that we've seen this week is due to the weather. And I'm sure Al Dutcher is going to touch on, you know, this ridge of hot, dry weather that's parked over the western corn belt at a really unfortunate time for corn production.
Yeah, he'll have the answer for you, Elaine. Don't worry. How much of it is fun covering?
Well, that's, I think, that explosiveness. So even going into the report, into last week, you still had the speculators were net short in soybeans, net short in corn, and they were kind of going both ways. They hadn't made up their minds to become bullish on the markets yet. But I think once those reports got out of the way, including the grain stocks report, I think then they felt free to really concentrate on this weather, which is very concerning, especially for the western corn belt. And I think now that's why we're seeing this explosive movement this week, is short covering from the funds.
What is basis done, at least up there in that area, as the futures have gone crazy?
Well, for spring wheat basis, it has sort of pulled back. I mean, and part of that is just the switching to the September contract. You always see some spurts and jumps around from that. The hard red winter wheat basis has improved a little bit a couple months ago, but has stayed steady since then. Corn and soybeans, day to day, we do see slight pullbacks. You know, it gets weaker by a penny or so when you see the rallies like this, but it hasn't really fallen apart. You're talking about Midwestern processor level basis bids still at that 36 under level.
What do you think the meat was in Friday's reports?
Well, I don't know that it really matters so much that it wasn't. I think it's already priced into this year, but I think it's interesting to think about the scenario that eventually we're going to have a year when there's more soybean acres than corn acres. So Friday showed 90.9 million acres of corn and less than that of soybeans. But someday we're going to see more of that as we continue to be the market that Asia comes to for its soy protein.
So was that a surprise then that it wasn't higher? Is that what you're saying?
Yeah, I think that there were some expectations. Some traders, some funds did expect to see soybeans beat corn on the acreage number. And it probably as a result of the prevent planting that happened this spring, that is potentially why we didn't see that happen yet this year.
Any demand implications from Friday's reports?
Oh, not necessarily. I mean, especially the grain stocks report that showed the inventories that are sitting in the bins still, that was more interesting as far as the carryover, what we're going to end up with at the end of this marketing year, and it's still very large. I mean, it's hard to get real bullish for old crop grain when you consider how much is still sitting around in bins, but I do think that these yield problems, if they continue, especially during June or July that we're in now, you know, that's something that can add some bullish fervor on all of the contracts.
So individually, where do you think prices go here?
Well, so when I left my desk, December corn futures were above $4, and soybean futures were possibly, you know, within range of striking $10. Spring wheat was above $8. So it's really, you know, this is really the moment where we have to decide if we're going to be rallying through the summer because the weather gets worse. I honestly think it's a question for Al more than me. You know, if this July heat is widespread through the center of the Corn Belt, through Nebraska and Iowa, areas like that really start to drag down yield, then I think we are off and running above that $4 level, toward $4.50, $5. You know, it depends how long and how bad it gets.
What does that mean for selling then? Just a gamble?
I think if you are someplace that has good yield prospects and you don't have anything sold yet, here's your $4 that you may have been waiting for the past months and wish that you still had. Here's that opportunity. But if you're somewhere that you are worried about your own yields and you've already got something sort of on the books, I would wait and see. This is really the moment to be watching those weather forecasts.
Same in beans?
Same in beans, absolutely. And beans, you know, just agronomically and on the markets, we always tend to see them follow the corn rally a couple of weeks later. That's just when they tend to be at their point of the most risk. We're seeing that this year, and I am heartened to see that the speculators are recognizing that the beans too are affected by this hot, dry weather. So same exact advice, just really be watching those weather forecasts.